All right. Hello, everybody. I'm here with Danny. Today, we're going to look at selling a cash secure put on Google. We're going to be using the GenX system to determine the strike price and also the expiration, and looking at making some juicy premium over the next few weeks, and we'll see what that looks like. I'll go ahead and bring Danny in here. Hello, Danny. How you doing?
Hey, Mark, how's it going? Thanks for getting together on this. Really looking forward to getting this $150,000 paper account going and sharing it with everybody out there that's looking to get into selling options.
Yeah. So this is a continuation of our video last week. So we did a set up the Webull account for Danny, $150,000 account. It's going to be a paper trading account, so we can show you how the system works. If you're a beginner, it's a great place to start. If you have real money, you can choose to follow along, set up the Webull account, use paper money, or you know. We're not financial advisors and tell you what to do, how to spend your money or how to invest your money. But if you would like to do things on your own, that's going to be up to you. What we're going to do is we're going to look at Google today, Danny, and we've been talking about that. We've been watching it, as we know, and what we're looking at here is the daily charts and what we can see over a period of time since about February 4th. You can see a red signal pop on the GenX system, showing a downtrend, and you can see it followed that downtrend until it hit about $142, bounced up and tested a few points here at about the 166, came back down, tested at about the 150. And since then, it's been, on a bullish trend. We've had
Yep.
some ups and downs, but we've had a lower high. And you can see that, we've bounced up from there, had some nice momentum, almost looks like a change of character at the 166. So, what we're looking at right now is a very healthy momentum. We can also see a very healthy consolidation retest back to maybe the 166. And looking at Google, I would expect a bounce in. Let me take a look here. What I would expect is maybe a retest of this level, and then more on the uptrend going from there. I know Google the past few months had some issues with some outages in March, another outage, and I believe in the beginning of this month. And so, there was some challenges they had that added to the into the downtrend. But I think, at these levels down here, I think I would imagine that everyone understands, and even institutions, retail investors, that Google's not going anywhere, right? They're definitely, got some work to do, and which it appears they've been doing and gaining confidence, since those outages. There's tariffs and different things, Danny, that could be having an impact on Google. But, looking at a very healthy since April, beginning of April to now, it looks like it's on an uptrend. So what we're looking at today, Danny, is, doing a cash secure put on Google. And so looking at the daily, I see a lot of support at the 166. If I go out to the 4 hour time frame, there's definitely a lot of support there at the 150. You can see there's over 2 million buy orders at this level,
Yep.
which means that if it did pull back to the 150, there's a lot of people that bought at 150 that are probably willing to buy again if it goes down to the 150 levels. So
Right.
if we go to the 1 hour.
Well, right now I'm not currently not in the stock. I have my cash on the sidelines and looking to get in to the market to make some premium and to make some income. Now, if I'm willing to buy the stocks at that price that Mark's talking about, then the risk becomes very, very, very little. Maybe you can elaborate on that just a little bit, because that's our goal here. We're really trying to identify what is the bottom that we think is a good price for us to buy the stock at. Is that what we're talking about here, Mark?
Yeah, we want to do one of two things, right? We're trying to make premium or income, passive income on the cash that we're going to invest into Google.
Hmm.
Uh, and we also, if we have to own the stock or we get assigned the shares, then we want to be okay with owning those shares, Danny. So,
At a price
um,
that's really good.
yeah, Google's currently trading, at about the 171, 169 range.
Yep.
And so if somebody wanted to buy the stock at 170, 171, then yeah, if you got the money, you want the stock now, you can buy the stock, lock it in, have it because you believe it's going to go up from here. You're a long-term investor and you're okay with doing that. Nothing wrong with that. That's what, the majority of people that invest in the stock market, that's how they do it. What we're going to look at is, and what I'm looking at is saying, okay, if I go back to the daily chart, I can see there's a retest happening.
Yes.
And so if it's going to retest and come back all the way to the 166, I would rather buy it at 166 as opposed to the 171.
Yes.
And because I don't, the market could be volatile, right? With the tariffs and fears and uncertainties, you know, is it guaranteed that Google's going to go up from where it's at? Well, nothing's ever guaranteed. Anything can change, anything can happen.
Correct.
So it's all about risk and what each individual investor, is willing to and wanting to look at in terms of their due diligence and investing in the stock market. But so what we're looking at specifically is what price would I like to own, or what price would an investor like myself or you, Danny,
Yep.
what price would we like to own it? And if I can reduce my risk and make some income in the process, then we're going to look at what that looks like and determine if it's something we want to do. And that's what we're going to do today. So,
Yep.
um, looking at the 166, if I go back to the 1 hour chart here, you can see there's a lot of support at the 160,
Yes.
which is below the 166. So you can see there's over 1 million buy orders at that level,
Right.
which means if it broke through the 166, there's a very good chance it's going to bounce off the 160. It has to go through two levels of pretty strong support in order to fall below the 160. And even then, you can see there's support that was built at about the 155. But so looking at it from on a 1 hour chart, you can see again there's a lot of bullish momentum
Yes.
from May 19th till now. A healthy bounce, and we're looking like another bounce from there. We even got a green candle
Yep.
showing there. So in the next hour, another green candle. I mean, on the 1 hour chart, it can show some momentum. We got a bearish signal, which came off of a resistance. And now we have some positive momentum coming off of the support here.
It's like in the 1 hour chart, it's showing like almost it's going to come to a wedge out at, and you already drew that yellow line to where you forecasted it going to wedge to based on, some previous analysis that we did.
Yeah, correct. So yeah, looking at this, right, you can see it's kind of doing this. So like you're saying, Danny, if this pattern continues, we're probably
Yes.
looking at something like this, right? Of consolidation, right? And how long is that consolidation going to last? We don't know. But, if the consolidation lasts for a couple of weeks, a week, a few months, and if it decides after the consolidation to, uh, let me show this here. If it decides after the consolidation that it wants to take off, then, a cash secure put entering at a lower level, you're gonna be getting, if it does that, then you're gonna be collecting premium, the full premium on those shares, right?
Right. We're very, very comfortable based on what we're seeing, based on the GenX indicators, that this is our not forecast per se, but our thesis on this stock and getting into this trade at this
That
time.
that's what I would expect.
Yeah,
That's what I would
right.
expect to happen, you know? Of course, there is the possibility of it going lower. I think 160 is probably a realistic support, so there is the chance that, it can fail the support and go in this direction,
But if it hits
and
that,
then
or I don't mind owning the shares. I don't mind owning Google at 160.
yeah, and then from there, when we may get consolidation between the 160 to 166,
Yep.
but at some point, is Google gonna stay there forever? And even if it did, you can sell cash secure puts and make premium while you own the shares as well. So, but I would expect, even with some consolidation, that eventually we would come back and at least test the level of 178, which was the previous, high, the recent high anyways. Um, so those would be my expectations. So holding it for the next month or few weeks or letting it play out for the next month, I think it's pretty secure in terms of my forecast of what I would
think so
expect.
too, and there's also a lot of new products that Google just released. Their VO3 video, um, simulator is incredible. There's so much buzz right now around, Google and all of their new tools that they're releasing, so I think with that as well and what's going on with how they're just trying to, stay in with the AI and stay competitive with ChatGPT, they're really putting on a lot of products right now.
Right. No, no, definitely. I feel pretty, definitely stock right now that I think is worth and we're gonna look into the cash secure put. We'll go ahead and do that right now. We'll look at what that looks like financially, right? So, on Robin, we're gonna look at Robinhood for now. And then what we're gonna do is we're gonna set up on Danny's side the option chain on Webull.
Yep.
So if we sell a cash secure put for the June 27th expiration, it's about 4 weeks, right? 7 days, 4 weeks. 28 days divided by four is seven. Yeah, 4 weeks. And we're looking at the 165 strike price.
Mhm.
And so if we look at the 165, you can see the delta is about a 32. Typically in the GenX strategy, we're trying to stay within a point 0.2 to point 0.3 is a general rule of thumb. But in the case of Google, I think because I like the direction and the trajectory that it's going in, we could be a little more aggressive, I think, on this one, Danny.
Yeah,
You can see the implied volatility is about a 29%, which is in a nice range. Um, looking at the bid and the ask, 2.82, 2.88. Um, you know, we're not going to get into the details of the bid and the ask at this time. We'll save that for later. Right now, we're just going to focus on getting into the trade. Or even at the, let's say, the market price of 2.82, you're looking at $281 of premium.
yep.
So what we're looking at is if I took $281 or $82 of premium minus 4 cents, and you're looking at a strike price of $165, basically what you're looking at is one contract is 100 shares. So you can see that here, 100 shares each,
Yep.
one contract. So 100 shares times $165 per share is going to be $16,500. So that's the amount of cash collateral that's required entering to the cash if you put of the strike price 28 days of expiration. All right. That makes sense, Manny.
Totally, yeah. No, we got it.
Okay. Give me 1 second here. So what we're going to do is we're going to divide the 280 divided by 16,500. And you can see that's about a 1.7% return on investment over 28 days.
It's pretty good.
If I multiply that by 12 months, it's about a 21% because 28 days is more. Some months have more than 28 days. So you're looking at least a 20% ROI per year. I'd say it's closer to probably 24%. And so that trade looks good to me, Danny. What do you
Like it.
think?
No, I think I'll take that trade all day long. Give me 20% annualized, I'm happy camper.
Yeah. So what we'll do now, Danny, is we'll go over to your screen now. And why don't you take it from here in terms of
Okay. So, we set up the Webull account in our last video. If you wanna take a look at that, it shows you exactly how to get to this point. Um, we have the chain here in the center. We have our watch list. We have our daily account, which is set at 150,000. This box here is for working orders. Once it's filled, it goes into the position section, and then this is where we we put the limit and the amount of shares or the quantity that we want to buy. So Mark, what are we looking at here on this option chain? I know for people that aren't used to it, there's a lot of numbers, and as you get into it more, it's going to get a lot more simplified. But you had mentioned a 165 number.
Yeah. So this option chain, on Robinhood, you click the button to go to the call chain, you click the other button to go to the put chain. And in Webull, what you're looking at is on the right hand side where Danny's arrow is that's where the puts are, and on the left hand side is where the calls are.
Put
Right,
down
of that
all
chain. And right in the center, in the middle of all of that is all the strike prices. And in the middle of that, you'll see where it says Google 170.58. That would be the current price of Google at the time. That's the real time value. So if we're looking at a put, then, at the 165, we're going a little lower than the 170. So we're going to look at the 165.
okay.
And once you click on there, Danny,
Yep.
on the left hand, well, actually, before we do that,
Okay.
on the top right hand corner of that option chain, you'll see that you can pick the expiration date. And so we were looking at June 27th, which is approximately or 28 days,
And you
basically.
can see it
4 weeks.
changes the bid and the ask price depending on when you want your option to expire. It changes.
Yeah. So when we're selling a cash secure put, right, what we're really doing is selling time. We're selling if you're below the strike price on a put and you're selling a cash secure put, you're out of the money, which means you're selling 100% um, time, right? We're somebody's giving us a premium for the option to buy, for us to buy their shares at a strike price of 165 if within that time period the stock drops to a $165 per share.
That's right.
And so, yeah, you clicked on the 165,
Yep.
right? We got that. We're in the put,
Yep.
right? So on the left-hand side, you can see we want to click on the sell,
Yep.
correct? And for our purposes, we're going to click market for now. With real money, you want to really click the limit and you want to set the limit price based on the contract price. But for the purposes of paper trading and just getting in and out of the trades. Sometimes the paper trading accounts they're not simulated 100% in real money. If you're playing with real money, you can set the limit price. It'll fill once it hits that limit price. Where sometimes you get a delay in the market.
Correct.
I mean delay in the paper money. So we're gonna do market just to get it filled.
Okay.
And we may give up few dollars in the trade, but for the purposes of the paper trading at 150,000, we're just gonna use it as example so you can get the idea and understand how it works. So you got market, it's a day
Yep.
trade, one contract, and so let's go ahead and hit that button, Danny.
Also,
Once
too,
you hit,
this estimated, you got the buying power and you have the amount estimated. Mark, what
yeah, so the amount, the $292 is the estimated premium. The actual premium will show up below based on the market value once we hit that button. So
got it. So go ahead and hit it.
yeah, let's try it. Let's see
So
what
let's
that.
try it. Market, everything's right. Let me just double check. Make sure I'm on the put side, 165. Selling, market one. All right. That's it.
Let's go.
All right. And you can see it works in the working.
Yeah, it's working. So now
To
it's like queue.
find a buyer because we're selling.
So now, oh, but you have it at limit. You have it on limit. You had it
Eh,
on limit.
No, I didn't. That's just the default.
Oh, it went back. Oh, okay. Oh no, there it is. It got full. It got filled. Yeah, you're right. Yeah, once it goes into working, the option chain gets reset.
The change gets reset back to
Right.
because we haven't looked at that.
Okay, so now that it's open and it's filled, you see how the open P&L. Let's look from the left. We'll go to the left to the right. So actions, right? That means if we're not going to do this now, but if you wanted to close this, you can buy back the option to close it. We just opened it, so we're not going to do that now. The symbol where it says symbol.
Yep, right there.
Yep. So you can see the Google, the 165 strike price. It's a June 27th expiration date, and it's a put. And we know we sold that put. The market cap means that's the value of the premium, the value of the contract at this time. On the next one is the quantity is one contract. The last price is what uh, the option contract is going for. So the option value is going to fluctuate with time, stock price, volatility, other factors that affect the price of the contract. That's the average price that you paid. So you can see it filled at $2.83, which was lower than the $2.91 that we or 92 cents. So when you do the market, you want to in real money, you want to set the limit price so that you control the price. Um, you don't want it to be sold at, it fluctuates and things can change. So you want to be in control of that. But for the purposes of paper trading, we use market price. And so total cost is the premium that you will collect. Um, and so let's see, the open P&L, that's what the current value. If you were to buy back the contract right now, it would cost you the $287, which 287 minus the 283. So you would actually see a decrease in your account to $4 if you were to buy it back at this moment. And for the purposes of selling options, we're not day trading in this one. It's a month out, right? So we're looking to hold it and let the time decay. Every day that passes, there's going to be so much premium. And you can see up on top, Danny, where it says negative 3.3 in the option contract chain of 165.
Mhm.
You can see up, move your arrow up higher to where it says sell there. There's a delta, right, of 0.3184. And that means for every dollar that Google moves as of right now, if it were to move up $1, we would make no, go back to the chain. Yeah,
Sorry.
go back to yeah. So for every dollar that go back to the 0.3184, for every dollar that Google would move up $1, we would see $31 in our profit and loss. So we'll go more over delta later and what delta means. But as the price fluctuates, the value of the contract will fluctuate, which will change what our P&L shows. So if the stock price moves down towards the 165 today, we'll
Yes,
see a negative P&L. That doesn't affect our ability to make the full premium at the end of the month. What matters is what is the price at expiration.
that's right.
And so everything in between is noise, but there's always an opportunity if you want. If Google's price goes up, then there's an opportunity next week. If it were to go up $5, $10, we can come here, close out the contract, buy back the contract at a lower value, lower premium,
Mhm.
and we would lock in a percentage of that $283. We don't have to wait the full month to um, to collect all that premium, even though that money has gone into our account. $283 has gone into our account, but we still have a contract that we're obligated to.
Yes,
And so, in order to close that contract, if you sell the contract to open it, you're going to buy the contract back to close it.
that's right.
And so, we can wait the full 30 days to collect the $238 of premium, or we can buy back the contract at a value less than 238 and collect and lock in a portion of that premium before the 30 days. So if Google decides to jump up $10 next week, we may be able to cash out 80% or maybe even $5 or, $10. If it goes up, we can close it out and collect, let's just estimating 80%. You can, 80% of $300, about 200, let's say $220, you can cash in next week. So there's many things that we're going to look at going forward, Danny. So in this video, we locked it in. And
Yep.
now what we're going to do is we're going to go and we're going to monitor this and we're going to see how it goes. We'll make another video when we decide to close it out or, maybe an update video of where it's at next week. If Google's price goes up and there's some premium there, what do we do? Do we make that decision?
Yeah, we'll jump in and check it out. So right now we're at a negative $3. So, Mark, what you're saying is if I'm going to go to the Google chart here, and I'll look at the, let's say I look at the 1 hour. Now, if this moves up in a upward trajectory and it continues to move like we think it's gonna move, then that's good. That means we're gonna see this number go from a negative number to a positive.
Yes, and the reason we're gonna see that go to a positive number is because the value of that contract where you just were, that value of that contract at $2.83
Right.
is gonna go down, right? So the
Right.
last price, right now it's trading at $2.88 per contract.
Yep.
If Google's price goes up, then the value of the put contract goes down.
Correct. Yep. There it goes. Yep. I think we're gonna get it.
So for now, we're not once I enter if I enter a long contract, right, or a put selling a put contract for 4 weeks out,
Yes.
that's it, I'm done, right? So I'm not monitoring it on a minute by minute, hourly by hourly. I'll take a look on Monday, see where the price is. It's unless there's strong movements or big changes, I'm not really concerned. I don't have to micromanage my trade. I
If
just
something
set it.
exciting happens and it goes from, let's say, it goes from 170 to 180 overnight, that's a
Yeah, so Monday, you come in Monday, it's at 180, then yeah, I'm gonna come take a look because I inherently know that
right.
that the option contract value is gonna go down, which means I can make a decision if I wanna buy it back and just lock in $140 and not have to wait 30
Yeah.
days for 200 to lock in the 280, right?
Yeah. And your rate of return increases tremendously too if that happens. Now you're capturing this.
So yeah, if you look at Theta there, go up to the option chain and you look at Theta, right? So that 8.0858 is per share. So if you have 100 shares, that means if Google stays at the 170 range where it's at right now, every day from now and Monday, there's $10 that will go into my account. And then that Theta every on Monday, I can come back and look at Theta again. If it's $9, then there's $9. If the next week that Theta the decay is going to accelerate.
Right.
So the closer you get to expiration, the higher that Theta number is gonna be. So that
Well,
tells you an estimate of how much cash, how many dollars is going to be in premium that your expiration. So the buyer of the contract has decay, right? So they pay the premium.
that's right.
Right? So if this contract doesn't go to 165, then and it stays at 170 the whole month, then they're gonna be losing $10 a day on their contract. Where does that $10 go? It goes into my account because I'm the seller, right? There's somebody on the other side buying this contract,
That's right.
wanting the wanting it to go down to 165. I'm just saying I don't think it's gonna go down to 165. And so I'd like collecting 2% per month on my cash. I just like doing that.
Oh, I love that too.
If I want to own the shares at 165, then I'm going to own the shares. What's going to happen if I own the shares at 165 and that's a support? That means I still collect the $280. I own the shares at 165, and when Google decides to go up, every dollar that goes up, I make $100
That's right.
on top of the 280.
That's right.
Right? And then if I have it at 165 and it goes back up to 170 and I want to sell a covered call, I can make $300 for selling it for 175. So somebody's going to pay me to buy think of it, right, Danny? Somebody's going to pay me to they're going to pay me money, $208 to buy Google at 165. And right now it's at 170.
Yep.
I can get it at a discount and make $280. I mean, 2%, up to 2%. That's pretty, it sounds like a good deal to me.
Oh, that's a great deal. That's a great.
And then if I get it at 165 and it goes back to 170, I make $500. Plus, if I want to sell it for 175, I can make another $500, right? If it goes up there. But if it's a 170 and I sell a contract that make another $300 for somebody to buy my shares at a higher price, I mean, it's a pretty good system. It's a pretty good strategy that we want to help people learn, Danny, because There's opportunity if you, number one, understand how to sell options correctly and know the tech, you know, the system or how to do this is one thing. But if you have the GenX system, right? If you know how to read the chart and you understand the chart, the trends, probabilities, technicals, the indicators, if you understand all of that stuff, then you're going to maximize your opportunity to be, your probability is going to be high that you're going to, always be on the side of collecting premium. And even if you own the stock, you're buying it at a support levels that are the stock's going to bounce from there and you're going to make money. So this
Absolutely.
is an amazing strategy.
Yep.
Not only, the wheel strategy is widely known, the wheel strategy and selling options has been happening for many, many, many years. It's nothing new. But when you combine the strategy, the wheel strategy, and selling options with the Gen X system,
And the
tool,
hedge pivot system that we have.
Tech Hedge Pivot system, right? Well, that's what I'm saying. Tech Hedge Pivot system is the package.
It's the
Is all there
package,
together.
and we use the GenX indicators to identify and give
Yeah,
more
go back to the
trades.
with the other screen. Yeah. So this, when you combine selling options with the system that allows you very quickly, because yeah, you can spend the time to, you know,
Your
open it up, draw the lines, go look at the buy orders, do
here's my
some
line.
research. You can do research on every stock to determine the technical parameters. What are you doing, Danny?
I'm just showing like if okay, I got to draw a line here. I'm going to come over to the line section. Then I'm going to do it
You can do all the work.
from stretch it out here. But yeah, from what Mark's saying is the Gen X indicator, it creates the lines for you, saves you a lot of time, and it does it with a lot of data and a lot of back a lot
Yeah,
of
there's a lot of work that was put into the design of this system to create indicators and signals and confirmations, to provide information for an investor to be able to make very sophisticated decisions.
yes.
And if you have Google is one we're looking at, but if I want to look at another stock, I mean, there's thousands of stocks out there. So if you want to look at another one, then yeah, it's gonna provide you with with data, information, um, supports, resistance, buy levels, high level, low levels, sell levels. So it's a very powerful tool. So the Tech Hedge Pivot system, we know how to sell the options. We know how to enter the trades. You know, we can do it without the Gen X system. We're still successful. However, with the Gen X system, it's just simplified our life to a point where you know the subscription cost of $99 a month is nothing compared to the amount of time and effort and energy that I would have to put in to construct the level of detail that it gives to me.
Yeah, the
Yeah.
value there is unbelievable. And there's a lot to unpack here and there's a lot to learn, but the system that we've created through Tech Hedge Pivot is we actually bring you into our community. This is not just buy our course and good luck. We'll see you when we see you. We're actually gonna bring you on board. We're gonna do a 1 hour onboarding. We're gonna get to know where you're at in your financial education. Do you have stocks? Do you not own stocks? And you're gonna be able to come into the community and learn and grow and share in your trades. We're gonna share in our trades. So um, even though there's a lot here we're putting at you, some of you guys are at different levels, but just for the pure beginner, um, I'm learning myself how to get into options. Mark's been teaching me a ton, and I'm excited to get into doing this $150,000 paper trade. See what I can get my portfolio up to, and I'll be looking to get some real capital. And Mark's also going to be doing some real trades with his capital. He's been doing investing for the last 20 years, so it'll be
Yeah.
what his trades are as well.
Yeah, if you watch the YouTube videos that I show where you see I'm entering, the thumbnails of cash secure puts, covered calls. Those are real trades. You'll see real trades in there with my real account, brokerage account. And so, yeah, we're trying. Our goal, right, is to help other people learn how to do this and to how to make money and become financially free. Like that's the goal. I mean, we're gonna make money regardless if we have this YouTube channel or Tech Hedge Pivot. We're already in the process of doing it. We're already growing our financial wealth. We're already developing. We're going. We're going. But I was talking to Danny earlier today. Our real goal is to bring this to people, to help people get a financial education that allows them to do the same. Right?
Right.
There's plenty out there for everybody. You know, there's an opportunity for everybody to make some money and make additional income, learn how to invest, get better at investing. Whether you're selling options, buying stock, whatever it's selling, what are the right entries? We're covering all that, but we're focusing on selling options because that's the for us the less risky, more conservative way to make up to 2% per month on the money that we have. So as we as we're in approaching retirement, or whether you're young and you don't have to wait till you're 65 years old to retire, right? So
Definitely don't wait till you're 65. If you're young, you want to retire at like 35, 40. But if
yeah,
you're
or retire early.
old,
If you're
you better start
if
now.
you're in your 30s, your 40s, your 50s, it doesn't matter what age you are. If you're 60 years old, 70, I mean, there's you have a retirement account. There's opportunity to leverage to invest that in a way that allows you to keep that nest egg, right? You don't want to just deplete it down. Or maybe some people it's okay. That's a strategy. Personally, I want to keep that egg. I want to keep that, whatever it is that's giving me producing cash flow, right?
That's right.
So
Yeah, we're gonna be you know, recording our path, recording our journey. So just like, subscribe, join our Discord. We do have a link that's going to be coming up here that you'll be able to easily just come on in. So if you're liking our channel and you're subscribed, you're going to get that notification. So be on the lookout for that.
oh yeah, we're gonna have fun. This is a lot of fun. So yeah,
Mark, that was
thanks,
awesome.
Manny. I appreciate it.
We'll keep monitoring that. I'm looking forward to seeing some green here within the next.
Oh yeah, yeah. We're gonna monitor. We'll bring it back, and we'll show more details and information on what people can do to monitor the trades and log the trades and things like that. So,
Awesome.
all right. Thanks a lot, Danny. We'll talk to you
See you
soon.
one.
Buddy, talk to
All
you
right.
soon. Bye bye.